Hello, Assalamu alaikum. This is Nafiz Al Tariq, and in this video I will explain why the global stock market is going down sharply this month. So the new year started with great uncertainties for the global investors, and the S&P 500 is already down by 10%, and the NASDAQ Composite is already down by 16% in the first 4 weeks of 2022. So the question is, why the global stock market is going down so sharply? To understand the recent downturn, we have to look at the background. So after the sharpest market downturn of 30% during the March 2020 due to the global pandemic, the central banks have gone for unprecedented amount of monetary expansions and the bond buying activity. So as a result, the S&P 500 went up by 76% from its low point of March 2020, and many investors thought that it will continue for some time. Despite that, many economists raised the flags regarding the risk of higher inflation. It was barely imaginable to many investors a year ago. Only recent times, in the last quarter of 2022, we have seen increasing inflation. However, the Fed chairman continuously saying that the inflation will be transitory and they will continue to maintain their dovish outlook. Recently, the inflation number hit hard and it increased to 7%, the CPI number, which is the highest since 1982. And to fight the inflation number, the Fed chairman changed his view abruptly. So they shift from their dovish outlook to hawkish outlook, and they indicated that they will increase the interest rate 4 times during this year. As a result, due to the sudden shift in Fed's view, the market have repriced in more rapid policy tightening. Another reason why the market downturn was sharp, because the market valuation was also very high. Stocks in America looks extremely expensive based on the CAPE ratio, which is the cyclically adjusted P ratio, a P ratio adjusted for the business cycle. One call it Shiller P ratio as well, and that ratio is 40 at the beginning of the year, 40. So this higher valuation was due to the view that the monetary policy tightening will be unlikely. But with the shifts in Fed's view, the market pricing it very quickly. Not only that, due to the Fed's view, the investors are repricing the long-dated assets also. For example, shares of Zoom and Netflix is down sharply. Netflix is down by 35% and Zoom is down by 47% in the last 4 weeks. That's a massive downturn in so short time. Another reason is the higher indebtedness in the economy. So the ultra cheap money let the companies raise vast amounts of money during the 2021. So the high indebtedness makes the company, makes the world, makes the economy vulnerable to the shifts in monetary tightening. At the same time, the economy is facing with supply shortage, US is facing with labor shortage, and they are forecasting that there will be real increase in wage growth. The great resignations in America and the lying flat in China, these are the reasons why companies are forecasting high increase in cost, and that will affect their profitability as well. So the expected profit number will be lower compared to expected. Another risk is the less optimistic global growth. The IMF cut its forecast for GDP growth of America by 1.2 percentage point to 4% for the year 2022. The risk is also coming from Chinese slowdown. An overheated housing market and overborrowed property sector highlighted the unsustainable growth of credit-fueled GDP growth. The recent case of Evergrande or Evergrande, there are debates regarding how to pronounce it, and there are many companies like Evergrande in China. So there are increased risks regarding the Chinese slowdown. The China's zero COVID policy will also be tested. They have to reopen the border because of the Beijing Olympic in February. There is another headwind for the global economy, the risk of war in Ukraine and the uncertainties associated with the pandemic, especially the new variant Omicron that is posing some threats to the global growth. So, to summarize, shifts in Fed's view regarding the monetary policy tightening, high stock market valuation, repricing of long-dated asset, high indebtedness in the economy, supply shortage and labor shortage, less optimistic global growth, the Chinese slowdown, the geopolitical risk between Ukraine and Russia, and the uncertainty related to pandemic. These are the main reasons why the global stock market is taking a hit in the month of January 2022. However, Bangladesh stock market fared well because the Bangladesh stock market is not integrated with the global stock market, and the correlation between the Bangladesh economy, the Bangladesh stock market, and the world stock market is very, very low. Thank you for watching the video. Stay safe. Take care.